Welcome to the Hustle Harder Show. This is James Gaskin again, your host, and we are very grateful to have you listening or viewing or whatever you may be doing. And we're extremely excited to welcome Paul Sparks as our guest for the conversation today. Paul, we're here in Denver, your hometown. Really, you and I have gotten to know each other a little bit over the last year and a half through a mastermind that we're both involved in, Collective Genius. Shout out to CG. And it's been really great to get to know you and follow your journey along, the last year and a half or so. And so we're really excited to get an opportunity to sit down and speak with you today. Would love to kind of dig in and jump into kind of how you got where you're at and where you're going. But, I'll kick it over to you for maybe a proper introduction, and you can tell everybody what you're working on.
Sure. Well, thanks for having me, James. First time you've been here in Denver with me, I guess, hanging out with Travis, who's my other buddy at Renovo. But I can just give you a high level what I do now. I'm a recovering wholesaler. I did that for a really long time. I think I just realized that there's a million ways to do real estate. And so what you start doing doesn't have to be what you continue doing. I am currently building some townhomes with a couple partners of mine. We got 18 townhomes here in town that we're building. That's kind of getting to the tail end of that project, working on trying to get these things sold and actually looking for a couple more opportunities this year to try to maintain maybe, 1 to 2 bigger projects per year. And then I flip houses. I've been working with you guys for, maybe 6 months or so. And, we focus on a little bit of a higher end priced home. We're not doing the lipstick, carpet and paint kind of thing. We're putting, 150, 200, 250 into these projects. We're selling them, close to $1 million or above $1 million, and I've found a little niche there. So we're not a volume-based company. We focus on, trying to do really solid deals. And when you do great deals, you don't have to do as many of them.
That's a great point. And I love that you, you've been doing this a little while, but your strategy has evolved a little over time. But you seem to really kind of know, the buyer that you're going for, and you really back into, kind of the deals that you're doing and using that as your filter by being very intentional, which I think is fantastic. I definitely want to come and touch on that again. But, I always think it's interesting. And I think for folks who may be listening or watching, who are in the business or thinking about getting in the business, it's always interesting to kind of touch on how you arrived in this part of your career. I happen to know that, you didn't start out as a real estate investor. And so, maybe touch on a little of your background and kind of what brought you to real estate, and then we can kind of see where it goes from there.
Fantastic. It's funny, as I think about when I was growing up, my mom was in real estate and my dad was an engineer. And I always wanted to be like my dad. And now I'm realizing my mom probably had it. She had it right. So, I grew up and in Atlanta. My mom was a real estate attorney. I worked in her offices, summer jobs doing things like this. So I kind of had some exposure to real estate, but not really the real estate investment side. It was, she was a closing attorney. So she did, in the attorney states, as you know, it's you have to have an attorney that closes all the houses. So I got exposure to that, but went to college, got an engineering degree, got out of engineering school and realized, actually, I did something in college, what we call a co-op, where you work for a same company and you go, helps you pay for school. So I came out of school with 1.5 years of experience. I'm really happy that I did that, because I realized I did not want to be an engineer. And so I packed my car up. I moved to Denver, Colorado, because I'm like, I'm moving west, and then it's funny, you get to Denver and you realize that everyone that lives here did exactly that. So you think you're unique moving out here, but I wasn't anyways. So I got into sales because, that's really where I figured out, you can make more money doing sales. It was engineering sales. I spent almost, I guess it was 9 years doing high-level corporate sales. I started in manufacturing. We were selling lasers and cameras for automation and stuff like this. It was really, actually, I had a lot of fun. I got pretty good at it. My skill set was always building large business cases with big companies. So got recruited by a competitor to essentially go and take, we call it AI now. Back in the day, we called it machine learning. So these were cameras that we were selling to United Airlines, Amazon, Walmart, to improve their processes. I'll just leave it at that. And I was doing very well at this. I was building a career in my mid to late 20s as someone who could put together, 5, 10, 15, $20 million deals with some of the largest companies in the world, and was making great money, but I was on a plane every single week. I know you know a little about that. Yeah. And sometimes 2 cities a week. Like it was, leave on Monday, you're back on Thursday. At the same time, I started dating my now wife, and you know how it's like, you have all these flight points. And so you're like, let's go travel.
Yeah.
So we'd be gone all weekend. I'd come back, I'd be gone all week. It was wearing on me. So I started buying real estate, because I just, how we all start, you listen to Bigger Pockets and you read Rich Dad, Poor Dad, and you're like, wait a second.
Yep. I think that's the starter pack right there. Bigger Pockets and Rich Dad, Poor Dad.
Best marketing message ever told, is like, hey, you can just collect a bunch of houses, and then that passive income will be able to replace your income and you can retire early. What an amazing dream this was. So that's what I did. I started buying houses, bought my first townhome, literally in the same neighborhood that we're recording this podcast in, called West Colfax. And, the game was on at that point. I bought my second, bought my third, bought my fourth. Long story short is we were getting ready to close one of the biggest deals in my career with United Airlines. And we'd spent years building this business case. And in March of 2020, the entire deal fell apart because of COVID, which was extremely disappointing. It turned out to be the best thing that ever happened to me. And I used that as an opportunity to say, okay, well, you could continue down this corporate road, or you could make this shift now and play the cards that are kind of been dealt to you. You don't really have much of a choice. So that's what I did. And I started listening to as much, information as I could consume. And that led me down the path of trying to be a real estate investor.
That's awesome. I think that's a great story, because it's, in some ways you were sort of pushed that way. And, sometimes you need that little push, but, obviously, there's something about real estate that caught your eye, and growing up around it. And I identify with that a lot, because my mother was a real estate developer, is to this day, specifically in the multifamily side of the business. But I always, was fascinated by what she did, and the tangible nature of it, I think was really cool. But, I know a little bit about your story and kind of how you initially got connected with some of the partners that I know you work with today. I'd love to dive into that a little, because I think that's a really cool, organic story of how you kind of found your way in this space a little bit. So if you touch on, kind of how that first, or I guess maybe it was the first investment property, it sounds like, how did that get started, and how did that inform where you are now?
Yeah. Well, I know that we want to make this show a little bit more about the local, like from a Denver perspective. Why did I do what I did? So I'm going to kind of take that line here. Again, Denver's an expensive market, like a lot of your clients, Dallas, Fort Worth, Seattle, like San Francisco, San Diego. These are expensive markets. And so for the first time home buyer, it's difficult to get into that market. And so what we're seeing in Denver and a lot of these major metros is increasing density, or they're trying to figure out how to increase density. You're working with the municipalities. They don't want it, but we don't have much of a choice, because how does someone that's 26, 27 years old afford $1 million home on a $140,000 a year salary? You can't. It just doesn't work. And so, just like here in Denver, you're seeing townhomes pop up everywhere. And so the first house I ever bought was a townhome, because that's pretty much all I could afford. And in fact, I was putting down the money that I had saved. It was pretty much the last dollar that I had. Not really, but the point was like, if I got hit with a $10,000 bill the day or two after closing, that was not going to be good for me. So I bought new, because you get a year warranty, because, it's less likely for things to break. Your CapEx goes way down. And at this time we were buying at, my first house was 3.25% interest. So it was just like, it cash flowed from day one. You could rent it out for more than you were paying. So I bought that first house, and you learn the tricks. Like every year you can kind of move. If you live there for 2 years, you don't pay taxes. So I was playing that game. So I bought my first house, and it was, let's just call it a single. Like you just get in the game. That's really, I think I understood that. I didn't have analysis paralysis. I went out and bought, a house that worked as quickly as I could find one. A year later, I bought the next one. And it was mostly because I needed to buy one, but secondly, because this house was, a block over, and the quality of this particular townhome was just far and away better than anything else I had seen. So bought this townhome and got to know the two guys that built it. They're now my business partners on the townhomes that I have today. And the reason is because the quality relative to the price was just so much better than anything I'd seen. This was an 1,800 square foot house. It was a 3-bed, 4-bath. I don't know why you need 4 bathrooms in a townhome that's 1,800 square foot, but everyone in Denver does it that way. And so, this was my first exposure I was always thinking of real estate as, houses. You collect houses one at a time. These guys were building 8 at a time. Then they had another project where they were building 12, and they had another one over here where it was 16. And I was like, oh, wow. Of course, it's obvious that there's an entire world of development, but I think there's some limiting beliefs where you just don't know how quite to put these pieces of the puzzle together. When I started getting to know, and these two guys, Nate and Hassan, I started thinking about it from a perspective of, back in my business development days when I was doing sales, like, well, what is value to these people? It's really easy as a salesperson to go up and be like, how do I provide value to you, right? And of course, anybody who's an operator or performs at a high level hates that question because it's actually more of a burden than anything else. Now I got to tell you what you can do to be valuable.
Yeah, do my work for me, and then maybe I'll be able to do that.
So, that's not how you do business. I knew better than that. So I started watching these guys. I started looking at like, well, what is value? And you start realizing that when you want to play a bigger game in real estate, I call it the deal triangle. There's 3 sides to putting larger deals together. There's the sourcing. How do you find development projects? How do you find it? There's a whole thing to that. Relationships is my strategy with sourcing deals, but sourcing, let's call that the first side. Second side would be funding. If you're doing a $10 million townhome development, you've got to raise a good bit of money. You've got to be able to secure debt. There's, experience that's needed. There's liquidity. There's net worth that's necessary. There's a whole side to this. The third side being operations. How do you actually do the thing? It may seem like, I don't know, maybe it seems easy to build 18 townhomes or, do a flip, but I can tell you it's not easy. It's probably one of the more challenging sides of all 3 sides of these. And ultimately, that's what I started recognizing was value exists really in these 3 kind of main areas. And when I looked at what these guys did really well, it was operations for sure. They've also been in the market doing this for, Nate 20 years, Hassan almost 10. They didn't really have a hard time sourcing deals. It was kind of intermittent, but really the thing that they needed the most was capital. And I recognized that pretty quickly. That is what I started focusing more on because it was what was going to bring me into these bigger opportunities. And so, again, I know we'll kind of dig into this, but fast forward to today, I've been able to raise, millions of dollars for the projects that we're doing. And that's really what my skill set was in the corporate world before. I mean, as well as I do, you're in business development, right? That's what it is. You're putting the pieces of the puzzle together. And I think I understood that. And that's why I've geared more towards these larger projects is because that's what my skill set is.
Yeah. And I think that's great too, because you found some folks that you recognize could execute, right? And execution is, to your point from a minute ago, like it's kind of everything. Like if you can't execute, you can raise all the money in the world. Like you're not going to be able to do much with it. Sourcing deals is also, a very needed component, but if you can't take that deal and turn it into something that's going to be profitable for you at the end of the day, it really doesn't do you a lot of good. So I think recognizing that, hey, the execution's not my skill set. It's not what I spent a lot of my time getting good at. So being able to recognize these guys had it, and then they had some needs, right? I mean, could they have continued to go about their business and, figure it out? Yeah, maybe. But, I think any relationship, hopefully it's, what is it? It's greater than the sum of its parts, right? The whole is greater than the sum of it. So, when you can bring some value and then supercharge what those guys are doing, give them the ability to do more while, benefiting from that relationship in some way, that's super powerful. And I think, understanding that and being able to recognize that is a really amazing thing. Obviously it's worked out, seemed like it's working out pretty well for you today. And then kind of leveraging what those guys, are good at, right? Which is the development side and some of the larger projects. That was a thing that they had in their tool belt, and being able to kind of take that and then focus on deals that are going to get you those types of opportunities. It's a really neat story. And I know you guys are working on a number of things now. I know you got a big project that is kind of nearing completion, right? Or is it complete?
It's not complete. But we're almost there. We ran into a couple hiccups with, we had an issue with our siding supplier. Like, something about the siding that we used, there was like a product defect. Painful, because I came from manufacturing. I know how rare it is to have that type of a defect inside of your product. So basically, we just had to replace all the siding on all the buildings, take it all off. We almost, it was like had to threaten a lawsuit, like, hey, there's problems with this. And so it probably delayed us maybe 3 weeks. Frankly, that project has gone so well since day one. I was a little bit like, this is going too well. I have enough experience in real estate to know that it doesn't normally go that well. So this is almost a little bit of a relief. Like, okay, finally, we have an issue. So it's all, taken care of. We are fortunate that the supplier kind of owned up to the problem. So yeah, we're getting ready to make our big push here for spring. We've got 3 of them sold. All of the interiors are done. The landscaping's done. So we're about to, hit it hard here to kind of finish the springtime out. And the thing about developing is I don't make a dime until the 14th one is sold. We have 18 to sell. You gotta sell these things. So that's I know we're going to talk about, a little bit what I'm doing on the flipping side, but I've seen these guys, I've gotten to watch them, and they live off of one deal for years at a time. It's a kind of a feast or famine sort of business as a developer. You either need to have a long pipeline, which adds risk, or you need to be able to make, all your money in one rip and, use it well for 3 years without knowing when your next one's coming. And so, that's not something I was really willing to do. And so we have the developments. My philosophy with those is, 1, 2, maybe 3 to 5 a year. 3 to 5 bigger projects per year that are spaced out, kind of hopefully evenly, but they don't always work out like that. But at the meantime, you got to find ways to generate cash in the shorter term. A lot of people use rentals. I have a handful of rentals and things like this, but I've found that in Colorado, it's harder to make rentals cash flow. And I also don't really want to collect a bunch of single family rentals. And so that's why we started flipping. It was to really just generate that income on a more like monthly type basis to offset the bigger deals that will come. They just take time to kind of work themselves out.
Yeah, definitely. And I think that's a smart approach, especially if you're trying to use that as your kind of main source of income, driving. But your issue with the siding is interesting to me because, so at Renovo, like we really try to focus on working with, it doesn't have to be the most experienced investor, but we find that, if it's your first deal, there's just so many things that you don't know, right? And once you get into these deals, there's so many things that will come up. And that's something that, blindsided you guys, that you never could have predicted that there would be such a problem, right? A manufacturing defect on something that is a very common, product, and you're working with guys that have a ton of experience, and that stuff still comes up. And so I think, experience is one of those things that even if you have a lot of it, you're still going to have these issues. But, you hopefully you sidestep enough, by working, and if you don't have the experience, by partnering with someone who does. Yeah, well, let's touch on your flipping business and what you have going on right now. It sounds like you got quite a bit, and as in real estate, I feel like just like in everything else, it's things come in waves, and it seems like there's a bit of a wave happening at the moment, at least on some level. So what's going on, and what you working on?
Well, you and I were chatting before this, and I almost described this as like kind of like a rebirth, like a second, act, because if you've gotten into real estate, this. There's so many shiny objects. There's so many things to do. And it can be overwhelming at first. And in fact, there's a lot of people who will tell you at the beginning of your, let's just say, career in real estate, you just got to focus. I don't know that I agree with that. And here's why. Because you don't know what you don't know. You don't know what you like. You don't know what you're good at. You watch a video on YouTube and someone says, hey, you can wholesale a house for 50 grand. And I was like, you're kidding. And you're also seeing the HGTV and someone's flipping this house and they're like, I bought it for 500. I'm selling it for 600 and I made $100,000 or whatever. And it's like, well, that's just not how that works. But my point being is there's just so many options in front of you. Now the hot buttons are creative finance, subject to, it's how do I do novations and how do I do syndications? Like there's literally an infinite number of flavors that exist in real estate. And when you're first starting out, you just don't know what you don't know yet. So I look back on it as almost, I think I was a little hard on myself for a while. Like I made all these mistakes. I was wholesaling. I was trying to do creative finance. I was trying to flip houses. I was trying to raise money and all these just different things. And I wouldn't have figured out what I was good at or what I liked had I not done those things. So I guess what I want to first say is give yourself permission to try some stuff. I call it a soft offense. I got that from one of my coaches, this framework. It's almost like this idea of if you're playing Jenga, think about a big Jenga block. James, you'd be a pretty bad Jenga player if you just went up and just mashed at one of the blocks. That's not how you play Jenga. You kind of tap on the blocks. You see which one's loose and you pull that one. And so for everyone that's out there that's kind of getting started in real estate, it's okay to tap on a few blocks, right? You don't have to go all in. You don't have to burn the boats. You don't have to commit and know exactly what you want to do at the beginning. Reserve the right to change your mind. So first off, when I first started, I was trying to do everything. Now, I'm not saying it was a mistake to do that, but what I was doing by trying to do everything was I really wasn't getting good at one thing. So I was trying to do all these things all at once. Now, I learned pretty quickly what I liked and what I didn't like, but at the same time, when it came to flips, you have to have a lot of attention paid to these flips because there's three sides. There's sourcing, there's funding, and there's operations. But I had a tendency to abdicate the responsibility of the operations to somebody else because I would say things like, yeah, that's not what I'm good at. I'm good at finding deals. I'm good at raising money. I need somebody else to do the operations and make sure it gets done. But here's the problem. There's a lot of, I'm just going to use the word charlatans, maybe like liars, people who are less than honest in the real estate space. There's a lot of B and C players, maybe is another way of saying that. And if you come from a corporate background where you're sitting at a conference table with directors and vice presidents and people, like you don't really have to worry whether you can trust that person stealing money from you or doing these different things. And so I think I got a kind of a rude awakening coming into real estate. And not everybody's out for your best interest. Not everyone's going to tell you the honest truth on the front end. And that got me into trouble with my first, let's call it 10 flips. I probably out of my 10, probably lost money on 3.
Oh, wow.
I had 2 or 3 of them that just, when I look back and we made 20 grand over the course of 6-8 months, whatever, not worth it. Yeah. A couple of them that were home runs. So like you average them all out. I just didn't do very good in my first couple years. And again, it's because I was trying to do everything all at once. So if you're trying to figure out your path, I guess what I would say is don't go all in until you know what the right path is. And so I had to kind of take a step back and simplify things. I was doing a lot of direct to seller, which requires Anyone who's done direct to seller knows there's a lot of components to that. It's a business that if you're not operationally excellent on, you're paying for all these leads that you're not following up on. Now you got to hire all these salespeople, and you got to have phone systems that work, and you got to have the CRM. It's so many things. Some people are really well suited for that. Right. I wasn't. I'm a relationship guy. I'm a salesperson. I'm a handshaker. I'm a, business dinner, let's make a deal kind of guy. And I just wasn't playing to my strengths, trying to compete with all the people. And you mentioned collective genius, where a lot of us are part of masterminds, and you see these people who are playing at such a high level, and you say, well, I want to do that. But I think the key to business and the key to finding your path is like playing your game, playing to your strengths. Forget about what everybody else was doing. James, to this day, I don't have a CRM. Like now, I used to, because I manage it all from my notebook, and everyone's trying to tell me why that's so dumb. And I'm like, but here's the thing. You give me a CRM, I won't put stuff in it. I was that same salesperson that I still am today. Like, I don't do that, and I won't do it. And I won't run businesses that require me to do that. So I had to kind of cut out a lot of things once I found my path. And here's what I will say is like, what's working for us now on the flips is getting very specific about who you're doing this for. The biggest mistake I would say that I made when flipping was trying to do anything that was a deal. I see this mistake now made constantly with a lot of flippers that they say, I'll buy anything where the numbers work. And I think that's just an absolute huge mistake. With a caveat, there's some people who are really experienced who've been doing this for a very long time that can make that work. But I wouldn't recommend that if you're getting started and you're trying to build a brand, because when you're flipping, one bedroom condos, and then you're doing, large single family homes, then you got a 3-bed, 2-bath that's in the city, you got a ranch that's out in the burbs, whatever. These are completely different buyers, completely different products. And if you try to be everything to everyone, you'll be nothing to no one. That was the biggest mistake that I made.
I think that's awesome, because I, wanted to definitely touch on, your biggest mistake that you can identify, and, what you see other people, the mistakes that you commonly see. And that's a great example of one. There's a couple other things you mentioned there that I just wanted to circle back on, the idea of giving yourself the freedom to try different things as you're getting started. I think that's phenomenal. I've always had, I've always kind of believed at a core level that, it's important to know kind of where you want to go, broadly speaking, but the more specific you kind of create, or you visualize the way to get there, I think that becomes a very limiting thing, right? Like, hey, I want to have a certain, whatever the preferred metric is, net worth, or whatever, I want to be able to retire at a certain age, whatever that looks like for you. It can be easy to think like, okay, now I've got to map out this whole path to get there. And then you kind of just end up focusing on this thing that, may or may not actually make sense once you get into it, right? When you're making those plans, you haven't done it yet. So you're projecting a lot of, expectations or assumptions that may or may not be true. And so once you kind of get into it, you start to learn, practically speaking, like what works for you, what doesn't, maybe what the environment is going to allow you to do, right? We're in a higher interest rate environment. It's a little different situation than it was 4 or 5 years ago. And I think being capable of kind of having that long-term vision or goal, but then being flexible about how you get there, I think is really important, because people do get really wrapped up, and they end up way down these paths that maybe don't make a lot of sense for them. And it's cool that you figured that out.
Well, I think it's because a lot of people want our brains just tell me what I need to do so that I can be successful. Give me the 10-step plan so I can just go do it. And there's just no shame in that, because a lot of us, that's how we start. We're eager. Just tell me what I need to do, because I'm eager to take action. And so we're just so eager for these blueprints. It's why we pay for all the courses, we pay for all the things. I did all that, and no shame. I actually don't regret any of it. But that's not how life works. That's not how business works. There's not a 10-step plan. It's about reading the terrain, right? Kind of, taking what the defense gives you as I'm a basketball guy. That's it. Like you sit there and you have this idea, well, this move is going to work, but only in certain context, only if that defender falls for your fake. And, I think that's the mistake a lot of people make is they get so tunnel vision on, I'm going to go do X, Y, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Here's the order of operations. And then they're closed off to potential better way to move forward. The rate at which you learn when you're new in this business, let's say first 5 years in the business, is so high. You're getting exposed to so many more new potential paths forward. So I couldn't agree with you more. It's like clarity on what you want, but completely uncertain on how it's going to happen.
Yep. I think that's super powerful. And that's, but the brilliant thing about experience, right, is that because a lot of what you said is like there's a lot of feel to it. So there's a lot of, in terms of charting your path, that the more you see stuff, like the better your kind of feel, that sense gets, and then you're able to avoid what could be pitfalls that as you're building in your career you may not have seen prior. But I think that's what experience is about, and that's why you've got to kind of get in there and take those lumps, right? You explain your first 10 deals that you lost money on a few you made just a little bit, and then you had a few home runs. Like that you went to college
Totally.
And how to do this, right? And the cost was, it sounds like you actually made money in college, which is not common. But I think that's a really important thing to recognize, I think, as you're coming through. We talked a little bit prior to jumping in here about I made a comment that real estate, and we at Renovo, we really believe in local. It's a defining characteristic of how we run our business, and we really try to be very, very specific in certain markets and go really deep. I made that comment and you corrected me and you said it's it is definitely local, but in many ways it's actually hyper local. Mm-hmm. Right? Explain to me what you meant by that, because I think it's a really relevant point.
Sure. I can just speak from my experience in Denver. And if you're listening to this and you're familiar with Denver, or you don't really have to be familiar with your own city, Aurora is very different than Littleton, which is very different than Westminster or North Glen, or these neighborhoods. It's hyper local. In fact, we're sitting here in West Colfax at 14th and Winona. If I hit a pitching wedge to the north and you cross Colfax, the property values over there, literally 100 yards away, probably increased by 20-30% because you're on that side of Colfax and you're by the lake. And that's really important, especially in a city like Denver, where neighborhoods mean a lot. And if you're listening to this, you can go to school on my tuition here. Like, don't make that mistake thinking that your buyer will buy anywhere. So the advice that I would give to my former self is you have to know your buyer. And now I know my buyer. I study my buyer like deeply. I'm constantly doing things to try to better understand what my buyer wants. And here's who my buyer is. They're me. I'm 33 years old, about to be 34. I'm married. We're talking about having kids. We need a little bit more space in order to do that. And most people who fit my buyer box, they have very similar characteristics. Most of them are professionals in their 30s or early 40s. They're making in Denver, they're making between 150, maybe a little less, maybe a little bit more. Some of them are earning 200K plus, but usually both people are working. They either just got married, they're thinking about getting married, they just had a kid, they're thinking about having a kid, and they need the same thing every single time. They're moving from that townhome into, they want a 4-bed, 3-bath. The 3-bed, 2-bath's not going to work anymore because mom and dad are coming in every now and then and they want to see you more, and we're going to have this kid, so I need to have a bedroom right next to my primary suite, but I want a big primary suite. The last one didn't have a big enough bathroom. It's like literally the same thing every single time. They want to be in neighborhoods that have decent schools. Some people are thinking more about that than others. Some people want to be close to the city. You know, people like me, I'm not ready to move out to Parker. I'm not ready to move out to, you know, wherever. You know, I want to be in Wheat Ridge. I want to be in Sloan's Lake. I want to be in these more neighborhood feels, but still kind of close to the city. These buyers are buying 750 and up. They're not buying $650,000 homes. They're just not, because they have the money to afford it. They're ready to upgrade. This is the second home, third home that they're buying. And they're thinking about the future. They're thinking about growing into this home. So it's a kind of a different buyer. And when you're flipping houses for $650,000 in Arvada, yeah, I'm not saying that that's not a valid way to flip. I'm just saying the folks who are earning the kind of money that my buyers are earning and the types of jobs that they're earning and the position that they're in their family, they can afford a $750,000 home. It's just a niche that I've found. So I focus on, you know, 750. Now we're starting to kind of push that. I was initially staying between like 750 and 950 because, again, I just know those buyers so well. If I was to buy a home right now, that would be me. I would be in that range looking for that price point. But we also found that, you know, the 2,700 square foot, 4-bed, 3-bath home that works in Wheat Ridge at 850, which is the last one I just sold with you guys. That same house, if you move it over into, let's say, like just south of Hilltop, you know, Virginia Vale, where's the next house I've got? That house is going to go for 1.2. It's the same exact house. They're just not 36. They're 43. Their kids are 12 and 14, not 4 and 5, you know, or whatever. And so I think I've just figured out that model where you're putting $150,000 to $250,000 into a home, it only works in a higher price point. You can't do that at buying at 500, selling at 750. There's not enough spread there. You got to go bigger. And so that is the key in my mind to getting traction in flipping. Doesn't mean that eventually we won't expand what we do, but it's like we want to get really good at serving the buyer that we know the best. And, you know, anybody who's looking to start flipping, you have a strategic advantage somewhere. People, you know, nowadays, what do? They spend time on Zillow. Everybody thinks they're a real estate expert because they watch HGTV or whatever. And again, I can tell you probably are an expert in the things that you know and like. So that is a niche that you can create for yourself. We started doing that here in town. We've done a handful of deals with you guys. We've closing 2 more on Friday, and we're starting to pick up some traction because, again, we've just focused. After trying a bunch of stuff, we got a sense for like, what do we like? What do we don't like? What do we do well? And now we're, you know, moving a lot of resources in to continue growing that side of our business.
That's amazing. So you said a bunch of stuff in there and, you know, we could probably sit here for hours, you know, kind of talking about all this stuff in depth, but a couple of things I wanted to come back to, you know, number one, you know, what customer do you know better than yourself, right? I mean, starting there as an incredibly brilliant and simplistic concept, right? But I think a lot of people do miss that. I think, you know, that's a really important thing to think about if you're in one of those situations where you're seeing all these deals and you're getting almost overwhelmed. It could be very overwhelming to kind of not have any focus, and to use that as a way to point your effort, I think. And to your point, after you've kind of played around a little and tried to figure out, you know, kind of where some of those specifics on where you fit in the market or even in the business, like but I think, you know, understanding, you know, a customer type and then being very intentional, it takes a lot of the, you know, I don't know, just the fluff out of it, right? It's like, I don't have to look at a million deals anymore. I just need to look at everything that kind of falls within these parameters that, you know, at the end of the day, they're things that I, you know, would want. And so I can go out and then very intentionally look for that stuff. It simplifies the business in an important way. I think that's a really important concept. But one thing I wanted to kind of tie in, because we've touched on this in a couple of different ways. You know, we talked about relationships, but you also started off, you know, talking about how, you know, the real estate in any industry you have this, but definitely in the real estate industry, it's very predominant that you do have a lot of, you know, I don't know, you don't know if we want to call them bad actors, but there are definitely those, right? Folks that do not have your best interests in mind. But in general, like you just have a lot of different characters out there. How, how do you think about, the relationships and the partnerships, right? Not just your business partners, but the folks that the subcontractors that you use, the attorneys, all the other people, right? I'm a firm believer, and I think we as a firm, like, we believe that every market has an ecosystem. That ecosystem is made up of not just the investor, but you've got the contractors, the title, insurance. I mean, you can go down the list, right? Lenders like us, but at every element of the business, there is there are providers, there are vendors, there are people that you need to be successful in your ultimate goal to be produce a profitable deal. We find that investors who are very focused in a particular geography, typically the one that they live in, are better at figuring out who they should be working with than others. How has that played into your career and your experience thus far?
Well, I mean, this business is about relationships, period. I wish I had learned that sooner, because I was trying to build a better mousetrap than everybody else in the market. And I mean, I'm not saying you can't win playing that game, but I'm also saying that it's a faster, easier, I think more fulfilling game to play through relationships, but you have to be careful because, and maybe this isn't just an over exaggeration, but when a liar says, "You can trust me," and someone that's trustworthy says, "You can trust me," they're both saying the same thing. So how do you know? Right? It's like, well, that's what got me is I'm eager to trust people because I like to think of myself as a trustworthy person. And I came from a business and an environment where you just didn't have to worry about that as much. And there's a big difference between malice and incompetence also. There's some people who are just incompetent. They're not trying to screw you over. They're C players at best. They're a little bit incompetent. Then there's other people who are out to try to screw you over, get you. Malice. Two very different things. You got to be careful. But it's the same thing. I think the way that I approach everything now, and including relationships, is through a framework that I call just micro-stepping. It means going all in and burning the boats is very rarely the right thing to do. A lot of us are really eager to jump into, business is hard. Being an entrepreneur, especially in your first 5 years, it's really difficult. So a lot of times you're eager for that, like, okay, well, this person said they could do this. So great, I don't have to think about that anymore. For a lot of business owners, it's like finances, or it's, you don't like to do the contracting. So the contractor says, "I got you." And you're like, "Thank God." And you just abdicate responsibility over. And that's just, you can't do it. You can't do that. Building relationships is built on trust. It's built on, and it takes time to do that. You got to let time do the heavy lifting, in this business. And so I don't think I have a magic bullet. It's like, you want to build relationships, you have to put in the work. You cannot substitute doing the reps, and you're going to make mistakes. I tend to believe it's better to err on the side of trusting people than being this cynical person who never can trust anybody. So, there's trade-offs to both ways. If you want to be over trusting, you're going to get burnt. If you want to be not trusting, you're not going to collaborate and you're not going to play to your full potential in the market. So there's a delicate balance. I will say that there's an inner circle that exists in almost every market, of the people that, that are playing, at an A level, right? They're playing the game the way that it should be. And if you can find your way into those relationships, I would recommend it, but there's no shortcut to doing the work. It's going to the meetups. It's going to the coffee, taking people out. You just got to shake the trees. You have to do the work, and there's no substitution for it.
Trust but verify, right? That's maybe an overused phrase, but I think it's very relevant. And I think, you hit on it at the end, right? There are in any market, and I think, we're talking about Denver today, but this story the themes are similar. The details are different, but the themes are very similar, whatever market you're in. And in any market, I feel like you've got this core group of people that are all really, really good at what they do. And it's all of the meetups, all the work that you're describing, it is to get in, like, to build relationships with those people. Because I know the way I look at things, and I think we look at things is like, hey, if we find somebody that whatever kind of position within the ecosystem they may hold. So maybe let's just use a real estate attorney, for example. Your mom is a real estate attorney, so that's an easy one. When you find the best in the market, the one that everybody who's a real player that in your network, you will start to hear the same names coming up, right? With those types of people. Now, if you just go and talk to anybody who's in the space, they may or may not, their recommendations may or may not be very valuable. But when you you spend enough time researching and just in the market, talking to people, building relationships, you will find there are certain people that are really, really good. And maybe they're on the operations side. They're an operator. And if you start to talk to enough people who have that profile, they will start to give you the same names for various things within the market. And that's how I think you can leverage this, being a local real estate investor. And that's one thing that I think we've really tried to build our business around. And, you mentioned Travis's name earlier. Travis Spear runs our Denver lending business. And, that's why, quite frankly, we hired Travis, because Travis has been an operator here himself, right? He's done a lot of deals. He's in the community. He's not trying to learn it. He's woven into it. And therefore he knows who is real. And then he can go to those people and figure out who they know that's real. And, when you meet somebody that has certain characteristics, oftentimes they surround themselves with people with similar characteristics. So when you get weave yourself into the fabric of a local investing community, you start to figure out who is trustworthy. And then you can start leaning on those people to help you find the people that you should be dealing with. And that is not a foolproof, plan either, right? People make mistakes, things happen, but I think that's a much better way than, we don't advertise, we don't do Google AdWords because our client is not raising their hand on the internet saying, I want a loan, right? They're harder to find. And so, but I think the same goes for any facet of that community or that, the ecosystem, is that the best people, you're not going to find them on a Google search.
Yes.
That may be one tool.
Well, and I'll go one step further too. You're probably not going to find them in a meetup.
Yeah, exactly. That's so true.
And so first of all, there's levels to this. So
sure.
Again, I don't mean to blanket, hey, just go to meetups and there you go. That's actually not how it works. You got to start. That's a great place to start. But I can tell you A players aren't showing up to meetups. You know why? Because there's a bunch of B and C players there that are constantly trying to get their time and their attention. And I had to learn that pretty quickly too. That you, first of all, plug for Travis, because he has been a huge asset to me, Travis Spear, being able to introduce me to, cabinet suppliers like you did yesterday. Like, to your point, when you can find the people who are plugged into that network, they're worth their weight in gold. And again, I guess the second thing I would say to that is don't be afraid to pay for your friends. Maybe that's like a weird thought to think about, but listen, I've probably spent hundreds of thousands of dollars in the last few years to pay to be in the rooms with the A players, because the A players don't want to be in rooms that are free. Free things typically attract people who don't have the money to pay. It's not a blanket statement, but my observation is that you want to find the A players, you've got to pay to be in those rooms. So again, there's not as many local opportunities for that. It's a lot more maybe national things, but those national things lead you to the local things. And so it is a sense that if you want to get around A players, they're not just going to be showing up. You can't just find them on a Facebook group. They're not dropping in, hey, I got this deal on a Facebook group. Because again, the A players call the other A players. It's an inner circle, and you got to figure out how to get into that. A lot of times the shortcut is just pay your way in.
That's a really fantastic point. That's why I love these conversations, because you never know where you're going to end up. But I'm really glad you brought that concept up, because you were 100% correct. You go to there's at least 3 or 4 real estate meetup groups in every market in this country. Most of them are filled with people who are trying to learn the business. They are trying to educate themselves. And it is an important component, I think, of educating yourself and really learning the nuances of the market. Very, not necessarily a step you need to skip, but I think you also need to be very aware that when you go into those situations, that you're not necessarily going to be surrounded by A players. And we've actually, we don't historically, as Renovo, we don't do a lot of those meetups, because we're really looking to work with professional investors that are looking to grow a business. That profile is not the most common attendee. We will go to some, and it is important to, from a branding perspective, to have your name out there, I guess, but we're not going into those rooms and expecting that we're going to bring a lot of clients out of it. So we've actually started, doing in certain markets, our own kind of little events where we, try to really target invitation only, like the real needle movers in the market, because that's our client. And if we can bring value to those folks, but I think that's really important. And another great point in terms of like, the way you phrase it, paying to meet those people is real, right? There are a lot of great organizations, and, whether they're masterminds, whatever the name, would be, that, that's money well spent. I mean, you've obviously seen a lot of value. We have as well. And sometimes that is a good, call it a shortcut. You still have to invest the time. You still have to invest in the relationships. You can't just show up and it works out. But if you're willing to do it and you're very serious, I think those are really great ways to sort of jump the learning curve a little and get plugged into the right people. Cause I think that is something we agree on. We at Renovo sometimes will use the term violent agreement. We are in violent agreement about that particular point. Is if you are involved and can surround yourself with the right people, they will help you find the other right people that can get you to where you want to go. Tell us what you're doing now. Like what's Paul Sparks up to? I know you're working on a lot of different things, the Whale Club, all that stuff. What's going on with you today? And what are you looking to do? What's the next handful of years look like for you?
Well, great question. I think of business as like a sport, man. It's fun. I enjoy it. I would do it anyways. I think most of the people that get into real estate, they come in this guise of passive income. But like, if I handed you $100,000 a month in passive income, most of us would still participate in business in some capacity because we enjoy it. I sort of describe it as like, I like to play business kind of like pickup basketball. I was joking with you. I'm like, hey, this needs to wrap up because I gotta get to, my pickup game that I play every afternoon. And here's what I love about pickup basketball. I don't have practice. I'm not coaching people. I would prefer to play. I'd prefer to be in the game. Let me get the ball. When I'm in the game, I'm playing competitively. I'm a competitive person. I want to win the game. But when I walk off the court, whether I won or lost that pickup game has no bearing on my mental state, right? And business can, and in my opinion, should be more like that. I'm not interested in managing a whole bunch of big, giant operations. Like, again, that's just not my skill set. It's not what I want. So when I think about what our business looks like now, it's one, we need I want a lot of reliability in my life. It means consistently bringing in a certain amount of cash. Now, I'm a big fan or a proponent, I should say, that reliable is not the same thing as passive, right? I'm okay working to earn my money. I'm not just trying to like sit around and let the money come into me. Like, I want to make a lot of money. And I'm willing to put time and effort into doing it. But there's like bumpers and boundaries that I want to kind of stay in. It means I don't want to manage more than 4 people. I want to have consistency. I don't want it to be this big up and down roller coaster all the time, like stressed out about when the deal's closing, if it's going to close, this, that, and the other. So, It's a highly reliable and consistent business on one side. I think most of us crave financial peace of mind in a lot of ways. And that is almost directly opposed to this word that we hear so often, which is scale. It's really easy to sell scale because people are wired towards more. We're wired towards, wow, I want to grow and I want to get bigger. And here's what I'll tell you. That is directly opposed to reliability. The second you start adding new things, you want to expand markets, you want to add new acquisitions managers, you want to have a new marketing channel that you're going after. Well, you're now adding all these components to your business. Yeah, it might help you make more money. I'm not saying I'm against making more money, but I'm saying I want reliability more than I'd rather have, $50,000 a month, knowing that that's coming every single month, than have some months where I make 100, months where I'm losing 50, this all over back and forth. So there's like one side of my life where I want consistency. And that's what I do with the flips. That's what we're doing with Whale Club, which I'll talk about here in a second. At the same time, I love to play business like a sport. Like, it's fun to collaborate with other A players. It's fun to go after big townhome projects and raise money and do these things, but it can't come at the expense of having, reliability and peace of mind. And so this is the business I'm trying to build. Is on one hand, we've got reliability. On the other hand, we're going after big, giant monster deals that I love to take down because it's fun, right? And collaborating with people that I want to play this business with like a sport. And that's what the Whale Club is we have kind of, I've worked with a bunch of mentors over the last, 3 years or so to kind of build this business decision-making framework is how I would describe it. It's really easy to get distracted from what you want. It's really easy to scale a business and now you have no reliability and you're like, oh, I can't figure out the problems. And so what we help business owners and real estate business owners specifically do is build a highly reliable business and go after some, let's say 2, 3, 5 big opportunities every year. I think a lot of people like myself, they're former flippers or currently flipping or running a wholesaling business. And, they're trying to also do these big land entitlement deals, but meanwhile, they don't really have a reliable business. And so all this stuff just kind of, it gets difficult to manage all these things. And so again, what we do is we help people, first of all, get clear on what do you actually want.
Really important thing to do.
Do you know what you want?
Yeah.
That's such an easy question to overlook, right?
100%. It sounds so simple, right? Like, of course I know what I want. And then you start asking people some questions and then you realize that they actually have no idea.
Yeah.
Right. And that's extremely common. So I think that's an awesome place to start.
And it's even stuff like, well, I know, like, let me give you a perfect example. I knew that I was not a great manager. I'm not. I knew that I'm not really a great coach, frankly. I'm a better player. And so then I look back at all my decisions and I was like, well, why are we trying to be coach? I am a salesperson, and here's the stupid mistakes that I made. First hire I made, guess who it was? Acquisitions manager. Why did you do that, Paul? Well, because everybody else was doing that. They were hiring all these components of their business. And meanwhile, I was put in a position where I actually didn't have the ball in my hand. I was coaching the other people that had, and it's like, well, why would you do that? Like, because we're human, because we make dumb mistakes. Like, that's kind of the thing is humans are unreliable. We're just we make decisions oftentimes because of our emotions, like our impulses, or we want to do it because we see somebody else do it. And it's really easy to screw that up. So we focus on I like to be done with my days by 3 p.m. I don't want to manage more than X number of people. Could I make more money if I changed those things? Of course I could. Mm-hmm. But I also don't want that. So one, it's like reliability, but also how do you play to your full potential? Like, it's okay to want to make a lot of money. It's okay to go after big things and do hard things because they're hard. But I don't want to do that at the expense of my health, or the relationship with my wife, or the vacations that we want to take each year, the things that I want to do. And so I think it's just this balance. I call it a barbell. You know, it's like on one side, we need to have reliability so that on the other side, we can go out and do really incredible things, play a big game, but not at the expense of the things that actually matter.
Yeah, and I'm not in the whale club. Perhaps that will change, but I do know a lot of people that are. And what I love about what you're doing is helping people find a framework. First of all, helping them work through some of those questions that when you talk about them now seem like obvious, but are not always as easy to arrive to on yourself or on your own. But helping people create a framework based on some of those fundamental things, like what do you actually want your life to look like? And what does that require versus this is just what I thought you did. I'm in business. You have to grow. Like, well, but if growing means taking on all these other responsibilities and hiring a big team and all this additional risk, like, does that really fit what the life you want to lead? Maybe it doesn't, maybe it doesn't. But thinking about that and helping people think through that. And then creating a framework for, almost a filter for how you're going to, evaluate future opportunities. Like, does this fit within, my consistency bucket, the side of the barbell that is supposed to be predictable and low risk? Or is it on the other end? Is it a big upside play? Is it something that could have, that asymmetric element that you're looking for, for kind of those bigger pops? And if it doesn't, then should I even be doing it? And I think that is something that is incredibly powerful. And all the people I know that are in the whale club, I think have benefited significantly just from kind of simplifying the filter again for your flips, right? Your filter is, well, would I want to live and the thing I think I could do here? Maybe, maybe not. You guys provide another filter that I think, can be incredibly powerful for people. So it's an amazing thing that you've created and like exciting to see it grow.
Thank you, man. And it was a direct result of like, I did this, I went through this process, and now we're kind of, trying to help people get out of their own way, man. It's just easy to, and again, ask me how I know. It's easy to sabotage yourself. It's easy to put yourself into positions where you're like, how did I get here? So if you don't have a reliable business, that's step one. First of all, is forget about scale. Your business will naturally grow the more you remove friction from it, right? So we think that growing, I gotta add more marketing channels and more markets and more salespeople and more this and more that. And you probably do at a certain point. But if you look at it first from how do we, first of all, define what we call a solvable problem? Like, if you don't have a winnable game, how you expect to ever win it? If the goalpost is not defined and it just keeps moving. And that's not based on what the business can do. It's based on what you want, right? So we're all about like, how do we lock in a certain floor? There's a certain amount of money that all of us need to live the life we want on our terms and timeline. I've noticed that for most people, like what we call the core priorities, it's usually between like 7 and 20 grand a month. Most people can pretty much afford to cover all of their core priorities on that. And then there's usually another 10, 20, 50, 100K that you want to fund all your preferences. You want to take nice vacations or buy cars or buy nice houses. Like, who cares? That's totally your decision to make. It's your life. Decide what you want. But if you don't decide those things, we'll never be able to get closer to it. You're just constantly chasing more and more and more. So we're all about locking that in. How do we just lock that in as fast as possible so that you can play business like a pickup basketball game? The outcome is not the reason why you're playing. I don't play pickup basketball to win. I play because I like to play it and it's fun to play. Wouldn't that be nice if business was like that?
Oh, I love that. I think that's a phenomenal concept. How do people get in touch with you? What would you want to leave folks with? Because you and I could sit here and talk for hours. I know we could, but I don't want to get in the way of your basketball game. And maybe this also leaves us a little something to talk about another time. So as we kind of bring it home, how can people get in touch with you and what does that look like? And, we can start to make our way back to the basketball court.
Totally. Well, I think if I could sum up the theme of today's conversation, it's that it's all about relationships, period. Relationship capital, this phrase of like, how valuable are the relationships that you have? So I've chosen to do a lot of things to try to optimize for that, which meant I had to start going on social media. I had to start putting myself out there a little bit more, telling my story, why I do what I do, this type of thing. So I wear it all on my sleeve. I put it all out on, you can find me on Instagram, Paul Sparks Official. Like I said, I think it's the best way to build relationships. People can see who you are. Of course, there's always a tint to how things really are on social media. But if you want to connect with me, that's the best way to do it. Paul Sparks Official on Instagram.
Yeah, some great content on that as well. So definitely reach out to Paul. I also want to throw a quick plug for the Good Neighbor Realty folks. They were kind enough to let us use their podcast studio. That's very, very grateful for that. And thank you guys for having us. Listen, really grateful to have you on the show. Thank you so much for coming and sharing some time with us. And we look forward to hopefully being a big part of the shared success as we go forward.
Absolutely, man. I'm honored. Thanks for having me.
My pleasure. Thanks, Paul.